Good morning. Our next presenter is Alex Black, President, CEO, and Director of Rio 2, which is focused on gold in Chile. We'll have a presentation and update on the company by Alex, and please feel free to submit your questions through the portal at any time. Take it away, Alex.
Okay, thanks, Tim, and thanks everybody for tuning in. So I'll just quickly go through this presentation, reader advisory, which you can read any time. This presentation's on our website. So we're talking about the Fenix Gold Project, which is our asset that we have in the company. It's the largest undeveloped gold heap leach project in the Americas. Did I lose the slideshow there? I think I lost the slideshow. Something happened. Open. Oh, we're back again. Sorry about that. I don't know what happened there. So you can see the project there looking east. We're looking towards the east, and you've got Fenix North on the left, Fenix Central in the middle, and then Fenix South. So very large project that's 2.5 kilometers long by about 400 meters wide. So a big project in Chile. We've got a proven management team. Company's called Rio 2 because we had success in the past in a company called Rio Alto. We built 2 gold mines, 2 gold oxide heap leach projects here in Peru. I live in Peru. I've been here for 20 years. This is the place where our technical team is based. So we've done this before. This will be our 3rd mine in 10 years. We've got lots of capital markets credibility because obviously we've raised lots of money, made lots of people money as well along the way. And just recently we announced that we fully financed Fenix to production. And that's been a major milestone for us, and I'll talk more about that in a minute. We're looking at a staged development approach to construction. It's very important for us to get to construction and into production as quickly as possible. So I'll talk more about that. And we believe our company is a platform for further growth. At the end of the day, we don't want to be a one asset company forever, and we continue to look at opportunities in the market. So this is the highlights of the financing that we recently did. The features of the financing, we're fully funded to production. It's a pretty flexible package. We did some equity. We've got Wheaton Precious Metals doing a gold stream for us, and we've got BNP Paribas backing up with a senior secured facility, which will come in after we get our construction permit later next year. So in doing the equity financing, we did minimal equity dilution. So I think shareholders are happy with that. It's been a tough market, but we're all in the same boat. So we just continue to head in the right direction with our heads down. So near-term catalyst, you can see the quantum of the equity financing there that we did, about $35 million. We're currently in the process of doing the definitive documentation with Wheaton. Once that's finished, we draw down on the first tranche of the financing that they are going to provide us. Pre-construction activities are starting on the ground in Chile. We're building up to getting certain things put together as we get closer to getting our EIA permit, which is going to be around March of next year. We're pushing as fast as we possibly can with this project. So here you can see the quantum of the financing in the graphic on the right. You can see the various components. You can see what our PFS capex was and how much of the financing that consumes. So there's quite a reasonable buffer that we built into this to cover contingency cost overruns. The current capex is around $110 million, as it was in the PFS. There's been no change to that. You can see on the left there the various components of the gold stream, the senior secured debt, and obviously the equity, which we just did. And as part of the equity financing, Wheaton Precious Metals put in $5 million US into our company as equity. And having them there and BMP just validates what we're doing with this project in Chile. And both of them have done lots of work in Chile, as most people would know. So here you can see the various stages and the timeline at the bottom. So it's a gradual build up as we go into next year, and you can see the list of activities there. We'll report back to the market as we hit our mark on certain activities. So it's just steady as she goes as we get this project closer to construction and production. Our company platform is spread out over a couple of continents. We have we have our CFO in Vancouver. We have our corporate development person in Toronto, and then we have the technical team in Peru and the rest of the people down in Chile. And this is our team. A lot of these faces were involved with Rio Alto. As I said, we built 2 mines here in Peru in the last 10 years, and so we're all very experienced and ready to go on this one. Our current ownership structure, you can see that there, the working capital, which was at the end of the last reporting quarter, but you can see the proceeds that came in since then of 35 million Canadian. You can see the equity split there of who owns our company, and insiders still have a relatively good chunk of the company. We're incentivized to make this thing work, and we're the same as every other shareholder in this story. We're in the Maricunga region of Chile. It's a very prolific gold region. You can see there's lots of projects in the area. There's only 2 mines. La Coipa is actually being reactivated by Kinross, and the Maricunga or Refugio mine, which you can see in green to the south of or to the bottom of the picture, that is now closed. It's on care and maintenance. So, there's only 4 listed companies in the gold business in Chile. That's us, Gold Fields, Yamana, and Kinross. And so we're in pretty interesting company in the country. Gold mining is not a big part of the Chilean mining sector, but we're going to make an impression on that as time goes on. Okay, so the ore body is beautiful and simple. Outcrops at surface, nothing better. If you're going to have a low grade bulk tonnage ore body, you want it to outcrop at surface, and we certainly have that. We have some nice grades at surface, so we'll be mining this, and very nicely to start with, knocking the tops of those hills off, and getting into the larger pit. The black line there is the $1,500 pit shell, and the blue line there is the $1,225 reserve shell. And obviously we constrained this very tightly to $1,225 when we did the PFS. This is a plan view, so you can see how things outcrop at surface and the various zones. Black banded quartz veins, it's the important part of this. They're pervasive through the whole deposit. They hold most of the gold. And the difference between this project and all the others in the Maricunga region is this is 100% gold oxide. It's still oxide all the way down to the bottom of that $1,500 pit shell, and the deepest hole 600 meters below the surface, and it's still in oxides. So this is an anomaly in the Maricunga region. There's nothing else like this. Most of the other projects start off with oxides, then go into a transition zone, then go into sulfides. We don't have any of that. Most of the other projects are associated with porphyries. We don't have that. So please note that as we get this story going forward. So there's a resource base. It's a sizable resource base. You can see the dollar values that we've constrained those resources by underneath each of the numbers. We've got a large inferred inventory as well. Our geologists feel very comfortable in being able to convert that. Once we get up to the mining stage, we'll start to look at converting inferred into M&I. And you can see the dimensions of the deposit there. It's a big deposit. Our water, initially our water's coming from Copiapó. We're bringing it up in trucks. We can do that to sustain a 20,000 tonne a day run rate of ore to pad. It's very easy to do. There's a main road there. It goes from Copiapó right past our project. And it's a way that we fast track this project. If we didn't do this, this project would be another 2 or 3 years out from the timeline that we're talking about now. So this is a means to an end as far as getting the project started. And I'll talk more about water in a minute. The layout of the project, very simple. You can see the leach pad there in orange. You can see the pits there in pink. You can see the stockpile there in green and the waste dump in brown. We've got enough space there in the orange and brown areas for the life of the project. So if this project, and we're planning for it to expand, gets up to, mining a total of 400 million tonnes of ore, we've got enough space in the leach pad area to cater for that 400 million tonnes, and obviously enough space for the waste as well. A game-changing event that happened just recently was we completed some run-of-mine leach tests. We always said that we were going to do this. There'd been a lot of metallurgy done in the past. It was all based on single-stage, dual-stage, triple-stage crushing. No agglomeration required here. There's no fines. It's a very simple project. So we put together a trial heap. That trial heap was done at altitude at our infrastructure site. It was done using the water from the water retreatment facility that we're going to be bringing up the water that I talked about earlier. And we came out with the same sort of recoveries that we would have achieved with single-stage crush. So we've taken the crusher out, and you can see also on the recovery curve that the gold drops out very quickly. More than 60% of the gold drops out in the first 30 days. So fantastic, simple, that's what you want to see. Nice and simple metallurgy. These are the metrics from the PFS. We used a $1,300 gold price. You can see our AISC's about $1,000. I think that when it's all said and done, we'll have that AISC down to the 800s once we get going. I mean, we think it's very conservative, but right now we're looking at $1,000. So this project is currently bulletproof down to about $1,100, and we're in an $1,800 or so gold price environment right now. So this project, once it gets going, will make a lot of money. And the NPV of the project, obviously at $1,300, was quite modest. But if you look at the chart there and you pick $1,800, we've got an NPV of about 400 million US, and our market value is less than 150 million US. So that's the opportunity that we see here with value creation. Our infrastructure site's very important to us. This is where a lot of the staging for the project will happen. It's 20 kilometres away from the project. It's an elevation of 3,200 metres. Our project's at an altitude of about 4,500 metres. There's a lot of things there that are going to help us get this project going. The camp will be built here. There's a power line here that eventually we'll connect to. We're going to start the project off with gensets. We've got some water here, about 5 litres a second, which is about 20% of the water that we need for our 20,000 tonne a day project. So a lot of good things here. We paid $1.5 million for this site, so it's going to be a big part of our story going forward. Some comparative metrics. I've picked a couple of projects rather than picking, other juniors that are probably never going to build their mines. We are going to build this, and I like to compare this against existing mines. So these are two good comparators, Marigold and Mesquite. Mesquite numbers have changed. They've just come out with some new numbers recently. We've got a much better project than Mesquite. Our project is bigger, longer life, simpler, and so, when you see that Mesquite carries a lot of value for Equinox, you can see what sort of value creation we're going to do Fenix, which is a much better project than Mesquite. So just coming to our final slide, we've had this project for 3 years. We've achieved quite a bit. This project was discovered back in 2010. The geologist who discovered it did a fantastic job in finding it, but nobody could turn it on. And we're going to turn it on. This is going to be a world-class mine. We are looking at additional water options, subsurface water, which we think will help us expand this project from 20,000 tonnes a day to somewhere between 80 to 100,000 tonnes a day, which will get us up to a run rate of about 250 to 300,000 ounces a year. We'll do a study on that once we've secured the water. But this is going to be a world-class project, and the market's ignoring it right now, but let me tell you, that's what it's going to turn out to be. So we've done a lot of things in 3 years, and we're running as fast as we can. Doing this financing goes a long way to us achieving our objectives. We're looking at first gold. We're currently guiding the end of next year. Hopefully that's the case. Our biggest sort of challenge, I think, is dealing with COVID. I mean, COVID is a global pandemic, as we all know. The impact of COVID on us going forward is unknown. We'll do our best, but I think that's our biggest challenge. There's no real technical challenges. We're in the middle of the EIA approval process. That's going relatively well. There's no red flags. We're guiding EIA approval by about March next year, and there's nothing that's happened that changes our view on that right now. So straightforward project, big tonnage, low grade, simple heap leach in Chile, and I hope that helps everybody understand what we have within Rio 2. Thank you very much.
Great.
My egg timer just went off, so there you go.
Perfect timing. Thank you very much for the informative presentation, Alex.
No worries, no questions. So it must have been pretty good because there's no questions.
No questions. I guess, one question I would have, obviously there's some more mineralization there beyond what's in the reserve, and would you look at potential to increase throughput rate, or would you say it's more likely to extend the mine life if you were able to incorporate that?
No, I think it's going to extend the mine life. I think the throughput rate will probably peak out at 80 to 100,000 tonnes a day. But if we can convert that 1.4 million ounces, and we believe there are more ounces potentially with more drilling, this life of project could extend, beyond 20 years, I think. I'm 63, so I may not be around when that happens. But, the whole idea is just to get this up and running, get it going. And I really honestly believe, because of the characteristics, this is a long life project that'll be around for a long time, and be a nice solid producer.
Great. Thank you.
Thanks, Tim.
I guess if anything, one other question I would have, obviously politics is always a bit of an issue. Chile's been a mining friendly jurisdiction, but there's been a little noise out there in the news. What are your insights on the current state of things?
No clue. I got no clue. I'm a mining guy. I can't get involved in predicting politics or gold prices or anything like that. At the end of the day, we'll absorb whatever happens to tax rises. I mean, there's tax rises coming all around the world. And this project, once again, breaks even at around $1,100. So any impost of additional taxes is going to be absorbed and will hit us minimally, I think. So, we just got to deal with it as it comes.
Great. Thank you very much, Alex, and thank you everyone for tuning in.
Okay, thanks, Tim.